Hello, everyone, and welcome to another episode of UBS Road to the Election and Election Watch series. I'm really excited to welcome today's guest, Josh Snyder, Global Investment Strategist from GQG Partners, here to the studio. Josh, good to have you here.
Yeah, thanks for having me. Happy to be here.
Yeah,
appreciate it.
The purpose of having you in today is, we've had a lot of conversations about the impact of potential election outcomes on the markets.
Sure.
That's really what our clients and advisors are consistently wondering about. If Trump gets back into office, if Biden stays in office, if Congress is made up one way or the other. And there's an argument there, kind of looking historically, saying it almost doesn't really matter too much. So maybe you could start us off by talking about the thesis behind that and the data.
Yeah, of course. Yeah, no, again, thank you for having me. And I think it's a great question. And this is one of the important things about having this conversation is, what is it, it was January 4th or whatever the case is. Reuters is out with story X, Y, and Z, right? Every media outlet, this is the year of democracy. This is, blah, 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 all these types of things. And of course, that's factually right. But at the end of the day, as investors, how does that impact returns? What does that look like historically? So why should I really care other than a couple of folks can drum up a few more articles, right? Meet your quotas for the year.
That's right, of course.
And so, but if you looked at the data, and let's specifically focus on the U.S., if you go back 50 plus years, it hasn't made a difference, right? So whether you're looking at the S&P 500 or whether you're looking at MSCI USA, at the end of the day, at least in nominal terms, stocks have just gone up in absence of an economic decline. Right? And that's really the key. And I know we have a graphic here, somewhere, that if you show, regardless if the background is red, regardless if the background is blue, donkeys, elephants, it doesn't matter. Historically, it hasn't mattered. Maybe it'll matter at some point in the future. But in absence of an economic decline, it really hasn't mattered. And again, if you look at that chart, what you see is really, with the exception of from kind of the mid-70s to the early to mid-80s, and then again from kind of 2000 to all the way out to kind of 2013, at least, when you're getting back to sort of prior high water mark, there were 2 recessions in those time periods, 3 from 70s and 80s. But again, it really hasn't mattered. So all this consternation about Trump and Biden and everybody else, in absence of an economic decline, doesn't matter.
Right. And just, in that chart we showed it, you could see the red and the blues. But even if you look at the S&P gains on an annualized basis per each presidential term, Bush Jr., he was down 4.4%. The S&P was down 4.4% on his, and he was a Republican, obviously. Obama up 16%, Trump up 15.2%, Reagan up 15%, Clinton up almost 18%. So, it like you said, it depends on what's happening economically. As
right.
As we've heard the quote for decades now, it's about the economy, stupid, right?
Yeah,
the famous quote by Carville.
Yeah, it's simple, but if that's all we had to talk about, we wouldn't be able to, we wouldn't be having this conversation.
That's exactly right. So why is it that people are always wondering, and if this, is this time going to be different? You know what I mean? And it's a different kind of election cycle. Politically, there seems to be more divisiveness, but from an economic perspective, here we are. Yeah,
I don't know. It's so funny. It feels that way, right? It feels like it's more divisive, but I think that's just because we have more reporting. We have 24-hour news. We have 24-hour, dopamine hits when you're staring at your palm. I think it feels that way because we've made it that way. But even if you go back to the 18th century, right? There were some nasty elections, right? What was in the papers? There's always been this contentiousness, but it's because people are tribal, right? We're talking about sports. I'm a big hockey guy, so you think about the NHL playoffs. If you're an NBA guy, you've got the NBA playoffs. We like to be tribal. It just happens that at the end of the day, we can, if you're a Rangers fan and I'm a Panthers fan, we can still go to the pub. But if you're a Biden fan and you're a Trump fan, you don't get anywhere near each other.
That's really true. Right? Although I have known a few Rangers fans like myself who get a little bit possessive about our Rangers, especially this season. But I hear what you're saying. Like when actually we could toast each other.
Right.
But yeah, it seems like this is. But it's not. I know. Like you said, you look at history. Some of those campaigns in the 1800s and the early 1900s were vicious.
Yeah.
They were literally mudslinging at each other.
They were nasty. Again, just go you think of Thomas Jefferson and John Adams, and John Adams wanted to pass a law, right, to basically, crack down on dissent from the Jeffersonians. That's pretty divisive.
That is pretty divisive.
Yeah.
And you make a really good point. I think a lot of people come in with bleary eyes every morning. I'm like, oh, you didn't sleep so well? No, but what they don't tell you is they were scrolling on social media all night looking at articles and seeing various sides of any kind of story or argument, whether it's real or not real, which is a whole other discussion, right?
Agreed.
So let's expand it because it's not just the U.S. that's having an election this year.
Correct.
There are 80 countries. It's just a little less than half the world's population. You said something like 4 billion people are going to the polls this year. We've got Mexico, a big election coming up in June.
Yep.
But there is such an importance about global elections this year, not just the U.S. one, that's going to be impactful.
Right. Yeah, great. I mean, look, we spent a lot of time talking about this. We spent a lot of time thinking about this, right? I mean, just from a GQG perspective for global investors who focus on long-only equities. And so it matters. And you can't ignore, right, where these companies exist. And so, but in absence of an economic impact, things broadly speaking hasn't really mattered all that much. So I think a great example of this is Brazil. So if you go back to the fall of 2022, right, there was all this consternation about Lula, right, when he took over from Bolsonaro. And originally, for a couple of months, actually Brazilian equities sold off substantially, right? And because people were very worried that it was going to go hard left, right, or things were going to look like, really after him from when Dilma took over, and things weren't all that great. But really what you've seen is it's actually been a relatively centrist kind of regime.
Yeah.
And so things actually rebounded quite substantially because it really didn't screw up the backdrop that was already kind of in place.
Here's something that I think, coming back to the U.S., our advisors and investors are always asking us questions about, okay, fine, the markets will be consistent right now at this point in our economy. Things seem strong,
sure.
Regardless of what the Fed might do. But then they go into the individual sectors. Oh, what's going to happen if Biden comes in with finance, or what happens when Trump comes in with infrastructure? And you were talking about infrastructure with me, and what we were talking about is they're both going to have to, either one of them is going to have to focus on this. And like you said, spend the money.
Right. Yeah, I mean, that's just great. This is really what we were chatting about, right? Like
yeah.
my view is, look, you and your spouse have decided you're going to purchase a home, right? So you've already decided how much you're going to spend. Now you two are squabbling over where to spend it, right? What neighborhood you want to live, what neighborhood you're going to live in,
right?
And so that money's going to get spent. So, but both the Republicans and the Democrats have just this entire propensity to spend. And they may not always agree on where to spend it, but that money is going to be spent. And you're already seeing it now, right? And I think the interesting thing is, on some of these policies, they're not that far off, right? I mean, Biden just raised tariffs on China massively.
He sure did.
That's been a big Trumpian thing to do, right, since his first administration. So even on the squabbles, right, they're squabbling at the margin.
Right.
So infrastructure is going to have to be a big push. I think even if you look at the Inflation Reduction Act is one of life's great ironies, but regardless, they're going to spend a lot of money. A lot of that money hasn't even been spent yet, right? So these projects, big push into infrastructure, rebuilding, whether it's bridges, roads, airports, this is not only going to be very important in the U.S., but this is actually already happening globally.
Right.
India is making a huge push across infrastructure, ports, airports, connecting that country. This is going to be very much a global phenomenon. And I think you're going to see, generally nominal spend be, quite high. So not everybody will benefit, right? That's generally, whether it's congressional spending or monetary policy, everyone doesn't benefit equally, but there will be a lot of beneficiaries, for sure.
And India is such a great example. Tangibly, they have grown from being, in something like 10th or 11th place in the world economy to now being close to third, or even they may even outseat China someday, becoming the second superpower of the world.
Correct.
And they are spending money on infrastructure and roads, and they're getting people to different parts of the country to live and work. And it all has to happen that way. Otherwise, the economy will falter.
Yeah.
If you're not actually spending the money. We always say in business, you got to spend money to make money. So it's a really good point that you're making. And from an investment perspective, there are some opportunities there in that space.
Yeah.
And others.
Yeah, of course. Yeah, 100%. I mean, I think that one of the struggles is, of course, if you look at the world and you say we still see, reasonably high inflation, right, and reasonably sticky inflation, where the biggest impact there has been on, say, like consumer discretionary, right, where people are there for staples, but the discretionary items have kind of gone by the wayside. And you talk to McDonald's, you talk to Walmart, right, you hear that and you sort of see that.
That's right.
But again, so I would say, that may not benefit, right, but again, infrastructure, utilities, right? I mean, you can't go a day now without turning something on, reading something about the impact that, the potential impact of AI, right? That's going to have from building all the data centers and all the energy requirements, right, that are going to be needed. Now, whether those numbers are true or not, it'll take years to find out. But what you do know is true is that build is going to have to come before that surge in demand.
That's right.
And then that, again, then trickles to areas like industrials, areas, that are more commodity-centric. Look at the price of copper and all these types of things. And so they're really all, linked. And I think that's what the market is telling you, too, is kind of what is potentially coming down the pike.
Yeah.
Anyway.
It's great. It's interesting. So let me ask you sort of the last question. It sort of is a yes or no question, but I don't expect you to give me a one-word answer. Is consideration of the U.S. election, especially this year, something that should be part of a robust investment strategy? maybe there's a gray area, but what's your thought on that?
Yeah, I know it's a lot of gray area, right?
Yeah.
You said give me like 2 words, and I'll give you.
It's not really a yes or no.
A 12-minute response.
Right.
Yeah. I mean, so what we always say is, look, and from how we think about the world, like macro is very important. So everything we do is on a bottom-up basis, right? We're focused on earnings growth. Show me where the durability of earnings is coming from, and generally, I think the price will map to that. But you have to be very macro aware, right? So it may not tell you what to buy, but generally it can be a very good tool in terms of telling you what to avoid. So I say all of that because it's important from the perspective of you need to understand the conditions, you need to understand the rules of the game when the country that you're playing in, because like oddly enough, a lot of this doesn't apply to China. Right? So but their elections are different and the structure is very different. So not everything we say applies equally everywhere. And so very sort of long-winded gray answer to your question, it does matter because you need to understand the rules of the game. But in our view, should you just go out and make wholesale changes to your portfolio because you're worried about Trump being in the election? Probably not.
Good answer. That was a great way to kind of give that. And of course, we always say to our audience who are our clients of UBS, make sure you're talking to your financial advisor because they know what's best for your individual financial situation. Josh, thank you very much. Great to have you here.
Of course, yeah.
Great conversation. You got a lot of great energy. I love stuff like this. This is terrific.
I
Hope to get you back soon. Good to see you.
Thank you.
And thanks again to Josh Schneider and, of course, our partners at GQG for bringing Josh here to us today. And for more information on this series and everything going on election-wise here at UBS, visit our website, ubs.com/election watch. You've got other episodes in this series there that we've done over the last couple of weeks and months, plus a lot of other election-related content. And again, we recommend that you continue this conversation with your financial advisor. Until next time, I'm Anthony Pastore. Have a great day, everyone. We'll see you soon.